Hello, everyone. Welcome to Go Global World. This is the 55th, it's like 5-5, 55th GGW Sharks. And we again doing this with New York Tech Week. We're so excited to partner with Anderson Horowitz and New York Tech Week. It's been so far several years we are partnering, and we are excited to be partners again. And now most of the people are joining from New York, but some of the people are joining from other parts of the world, including investors. Some of the investors in the New York, some are outside New York, but also around the United States. And this is the time when you guys would have 2-minute elevator pitches, no slides, and you have your chance to convince your investors and get a meeting with them. So let's get started. And I'm going to present a few slides about Go Global World, and then we have some really interesting announcement from our sponsor, and then we will present you the investors, the rules, and we'll kick this off right away. So first things first. Go Global World is an ecosystem. It's a group of companies where we connect founders and investors. GGW Ventures invests in startups at Seed Series A. GGW Services, we do incorporation, taxes, and accounting. But Go Global World is a platform and a community where founders connect with investors. We do warm introductions to only relevant investors. And for investors, we process their deal flow. How does it work? You, as an investor or as a startup, create your own profiles, but it's not static pages. It's smart pages where the system knows your criteria and will offer you only relevant people among verified, vetted networks. So you're not doing that random connection request something. You always see only pre-vetted, pre-screened network by us and by our system. So every time you see an investor, it's already a fit to your criteria based on the criteria you set. Same on investor side. If you see a startups in your matching, then it's already a fit to your criteria because you set those criteria. And we make sure that you have only relevant and verified network on the community, on the platform. So how does it work on investor side? This is how investors see your profile. It's a very limited information on purpose, stage, business model, traction, what you do, and half of the screen is taken by 1-minute elevator pitch, where in 60 seconds you convince them why it worth their time to speak with you, and they would decide pass or connect. If they would need more information, they would click on your profile and they would see the whole full one pager of your company and take a decision. And if both sides decide to connect, then it's a match and you can have a conversation and take it further. But when we say relevant connections, we mean it because the whole thing is built about relevancy. The whole mathematics of the platform is built about that. And we want to make sure that you meet only relevant startups as an investor or relevant investors as a startup. So your criteria, how you set them, is in the center of our mathematical model to make sure you're not wasting time on relevant people. Your time is money. Now, that's it about Go Global World. We're getting into the GGW Sharks with New York Tech Week. And with that, I would like to give a word to our partner sponsor, Empowerly. It's an amazing company that does a lot of interesting things that you guys would be interested in. Just a second. Let me get them to the stage. Please go ahead.
Okay, thank you so much, Daniel. Hi, everyone. My name is Stella, and I'm currently working in the startup internship program at Empowerly. I'm curious, is anyone looking for summer or fall interns for free? We're actually a college counseling firm with a pool of talented high school students. Through our program, we help match companies with motivated students for summer or fall internships at no cost. We handle all the logistics. All you need to do is share the job description and conduct interviews. We've already matched thousands of students with over 300 companies, including lots of New York-based startups. If you're interested in getting interns this summer or in the future, feel free to scan the QR code or link in the chat to sign up. Thank you so much.
Thank you so much. This is the company Empowerly. The guys are amazing. They were supporting us for some time, and we had a lot of projects interested to hire their interns. You don't pay anything for hiring their interns. They make sure they provide you the right talent at the right time. You just have a conversation with them, and so you have your talent. So empower your company. That's why it's called Empowerly. Thank you so much. GGW Sharks is announcing our panel of investors. It's an amazing panel from New York and around the United States. We have Dan Ellis, who's been here so many times from Sher Ventures. He's based in Texas, but he's been around different places, and we met him a lot in the Bay Area top conferences. Chirag Goel from Atom VC, Akshata Bailkeri from Alumni Ventures, Pankaj Kedia from 2468 Ventures, and Yegor from FounderPartners. This is the panel of investors who will be judging and asking you questions today, and maybe from some of you would get a meeting with them. I will let investors to present themselves in a moment, but let's hear the rules first. So if you follow the rules, we will make this event amazing. If not, then we might have some bumps on the road. So make sure that you keep yourself muted all the time, except for investors. And everyone who is speaking, please raise your hand. There is a digital hand that you can raise, so then we can see the order of people who is willing to pitch, and we will make sure that we put you on the list if you're relevant to this session. And so my team on the background will be selecting people on the fly, and we will give you the word to pitch. In order for you to be selected to pitch, you need to put your first and last name full, so we can identify who you are, your company name, and keep your video on. Without that, you might not be selected to pitch. Just make sure these simple things are done. Those who filled out startup profile and emailed us beforehand, also those who are on a seed and Series A plan, they will have a chance to pitch among the first. The rest will pitch on first come, first serve basis. And you will have very limited time to pitch. So you have only 2 minutes, no slides, and there will be hard stop. After that, you will have questions from investors and feedback. And we will connect you with those investors who said they're interested. And if they are, then we will do an email introduction after the event. And so you don't need to worry how to connect with them. It's a 2-hour event maximum. We'll have a hard stop in 2 hours. And we cannot promise you that everyone in here will be pitching, but we will promise you that you will pitch on the future events if you don't pitch this one. So just email us after the event so you didn't get a chance to pitch, and we'll make sure to give you priority on the future events. And we do these events on a frequent basis for the past 2 years, like 1 or 2 times a month. So you'll have your chance to pitch. We want to give everyone the opportunity to pitch. Just time is always limited. Now, the final thing that I want to say is that it's a 2-minute elevator pitch. To make it, to take the most of this, keep it as a story so investors understand what you do, and get to the point right away and explain why you're unique and what's your traction. And as Bill Rackett was saying, getting to wow, be clear, compelling, and credible. Don't forget, we have also the chat. You can network in the chat. We have investors, more investors in the chat. So exchange your contacts, exchange your information, support each other. But if you see someone is selling you something, please report it to us. We will ask these people to leave, because this is a safe place for founders, where founders meet investors or founders support founders. And finally, let's make some noise. Take screenshot of this session, tag Go Global World on Twitter, on LinkedIn, and say good words or share your feedback, how it was, and have some fun. This is our website, Go Global World, and this is our email. So reach out to us at any time. Thank you so much, and let's get to our investors. I'm so excited about today's session. Let's get started. Let's start from Chirag. And Chirag, how are you? Where are you coming from? Please tell a few words about your fund.
Yeah, absolutely. Hi, everybody. My name is Chirag Goel. I'm actually tuning in from New York, even though I'm based in Chicago. Came here for Tech Week, and it's been incredibly fun. And it's quite hot outside, so I don't know if any of you saw me like wiping my sweat as I'm like finally like cooling off in this conference room here. But Daniil and I actually originally met in San Francisco for their tech week, and then he invited me to join the 50th edition, which was a lot of fun, and I'm equally looking forward to participating in number 55 during Tech Week. And so, a brief on myself: I'm an investor with a firm called Adams VC. It's an early stage firm based in Chicago, but investing across the U.S. We invest exclusively in hardware companies spanning medtech, climate tech, productivity, automation, advanced materials, etc. And we typically like to invest in companies at the seed and Series A level once they hit at least quarter to $500,000 in ARR, unless they're a highly regulated medical technology company. We're usually investing about $500,000 to $1 million with the first check, with about $1 million in reserve capital. And my academic training and former investing background is in healthcare, so I'm primarily focusing on the medtech side of the deals that we take a look at. In addition to being an investor, I'm also actually a founder of an early stage consumer electronics company, which I've been working on for a few years. And so definitely have that founder's empathy, and can understand the roadmap that a lot of founders have to take in order to get their products to market. So in summary, you can probably tell that I live and breathe hard tech, and that's some of my favorite things to talk about. So really excited to hear the lineup of pitches today. And thanks again, Daniil, for the invitation.
Thank you so much. So exciting to have you again, and appreciate this really cool story about New York. I'm glad you're there. So I hope you enjoy it. So Yegor, please go next.
Hey everyone, nice to meet you. I'm with FounderPartners. We're based out of the Bay Area. We invest in software, seed and pre-seed. Our thesis is technical founders, capital efficient, preferably clean cap table. So we've done about 40 investments, 18 exits. We don't do any hardware or med tech or anything medical, so kind of like pure software with a skew to kind of B2B rather than consumer. And yeah, a bit about myself. Graduated from Stanford a few years ago, and based in the Bay Area, also building a startup in the AI space. We measure the productivity of software engineers.
Sounds exciting. Great to have you. Thanks for coming. Appreciate that. All right, so moving on, then Ellis, do you want to go next?
Yeah, sure. Hey, Danil, thanks. Great to be back here, and congrats on making it to number 55. Very significant. Hi, everyone. Dan Ellis in Austin, Texas, where it is also very hot. I am an exited founder and have about 10 years experience as an angel investor and a startup advisor. I currently represent the investing interests of a family office called Sher Ventures, which is actively investing, typically doing checks around 100K in size. I would say we're mostly sector agnostic, but we do especially lean towards AI first companies. We are generally just looking for amazing founders working on interesting products with solid signs of traction and growth. And excited to be here today and keen to listen to the pitches. Thanks.
Thanks so much. And just a little bit of just some small thing to add is that Dan was one of those investors who invested in one of the startups from Go Global World. So keep attention on this panel. This is like amazing panel today. So Akshata Bailkeri, do you want to go next?
Yes, thanks, Daniel. Happy to be on here today. I'm Akshata. I'm based out of the New York area, working for a firm called Alumni Ventures. We're one of the most active VC firms in the US, with over 1.3 billion under management. We back 150 to 200 startups a year, co-investing alongside top firms. What makes us really different is our model. We invest through alumni and specialty funds and tap into this very large network of accredited investors. We have basically been supported by 11,000 individual investors from whom we've raised that capital. We don't lead rounds or take board seats, but we move quickly, back a strong lead of investors, and add value through our broad network of founders, operators, and LPs. Personally, my background kind of started off in the public markets, and I've transitioned to VC secondaries and now venture capital.
So exciting to have you. We met with Akshata at Startup Grind here in the Bay Area. It was fantastic, and so excited to have you in our session. So thanks for coming.
Of course, thanks for having me here.
Pankaj, it's great to have you. You're opening our global session, and so no pressure. Please say a few words about you and about your fund.
Yeah, good morning, everyone, or good afternoon, everyone. I'm calling from San Diego. This is my first time here. So happy to be here. Think of me as a tech entrepreneur turned investor. I started few businesses inside Intel and Qualcomm, and now I'm a full-time investor. I'm founder and managing partner of 2468 Ventures, where we invest directly on the cap table, but also invest in funds. We are focused on AI up and down the stack, from silicon to language models to devices to horizontal layers, and then applied AI across different sectors. I'm interested in AI, disruptive AI, not marketing AI or bullshit AI, disruptive AI. And we are specifically looking for agentic plays. So looking forward to it.
We look forward to it too. Thank you so much. Such an amazing panel. Let's get started right away. So the first founder to present is Matthew Mays from Study Connect. Matthew, ready?
Yeah, I'm ready.
Okay, so let's get into it. You got 2 minutes. Please get started.
Yeah, thank you very much. My name is Matthew Mace. I'm a clinical researcher specialized in cardiology for the last 16 years and a previous founder of a hardware company. Interesting to know, if you don't know the world of medical devices, is that it's extremely slow, extremely frustrating, and the cornerstone of everything relies on human clinical trials. Over the last 2 decades, what we've realized is that clinical trials are getting slower and more expensive. And what we're doing at Study Connect is trying to find a different way to disrupt that marketplace. So what me and my co-founder Aditya Gupta, who's based in Bangalore, are building is an AI-driven marketplace that introduces medical companies and physicians to streamline the communication and the exchange of information, to find more highly relevant physicians and more highly relevant patients to be part of their clinical trials. Where we are in the terms of traction is we're working with some of the larger agencies in the United States, be that mainly in cardiology, to embed ourselves into their networks, to bring onto their physicians onto our platform, and also working with newer startup hardware companies, building slowly in that space. We've launched had a beta launch in the last couple of weeks, which is going incredibly successfully, and then we're looking to make forward connections as we're moving towards getting SOC 2 compliance by the end of the year, and then launching our platform at the beginning of next year. Happy to take any questions.
Fantastic. All right, you got 10, 20 seconds, Zach. So
10 more seconds of questions.
Yeah. Dear Sharks, dear investors, this is the time. Please, if you have any questions to Matthew, please go ahead and ask. Who wants to start first?
Matthew, I'll start. Thanks. Appreciate the pitch. Just curious about SOC 2. Is that a complete blocker at this point in time for you to get started, or are you able to kind of ease into the market in some way and subvert that requirement to just start generators early traction?
Yeah, generating some early traction, so making informal connections now. So we have actually three startup companies. Well, actually, two in the cardiovascular space, one in the endocrinology space, where we're using my personal networks and also networks of networks, making informal introductions. So sort of doing a proof of concept, doing things that don't scale, I guess, is normally the way you do it. So SOC 2 is just the blocker for the platform release and to be able to manage data digitally, but otherwise we're doing it on the side.
Can you talk a little bit about who some of your early champions have been and who might be advocating on your behalf for this technology?
Yeah, I mean, our early champions are, very much focused. So we have a big cardiometabolic space. So, GLPs, which are in the news for everyone else, right? So we have a cardiometabolic network in Kansas City and a cardiometabolic network in Austin, Texas. So these are big groups of patients that are represented. So they're the champions that we found so far, really vocal ones trying to get into clinical studies, trying to get the attraction of new innovative biotechs with similar compounds and saying, hey, look, introduce us to that. They're the user side, and the customer side, the biggest interest is actually in the hardware space, is in the medical device space. They generally speaking don't use contract research organizations. They generally don't use third parties. So they're trying to manage trials on their own and trying to hack that trial management, which is what we're trying to give them help on doing.
There are more questions to Matthew? We probably have 1 more minute for questions.
So you mentioned SOC 2. Do you need to be HIPAA compliant as well?
Yeah, so HIPAA is less so. We're not actually, at this stage, we won't transfer like health information data, but there is likelihood that, like similar sort of data. So yeah, our plan is like SOC 2, which covers about 60-70% of HIPAA and GDPR, and then later on in the year, next year, we'll hit HIPAA and then start exchanging patient data.
Because SOC 2 is 90 days of an observation period, so you should be able to get that knocked out pretty fast. And then after you have that, how long does like a typical sales cycle last?
We're saying well, I mean, given the as I mentioned, a couple of customers we're working with, like typically speaking, the sort of sales cycle, the ready to transact is sort of 4 to 6 weeks. What we're seeing at those startup level customers.
I see. So we are out of time. Do you guys have any interest to connect with Matthew? Who is in, who is out? Let's start with Yegor. Are you guys in? Are you in or?
Matthew, interesting idea. We don't do healthcare, so I am out.
Okay.
Right.
1 shark is out, 4 left. Let's see what Pankaj would say.
Yeah, it's not disruptive enough for me. So I'm out.
Thanks, Pankaj.
2 sharks are out. Akshata.
Hey, Matthew, thank you again for the pitch. For my end, I would say it's a little bit too early for us. For that reason, I'm out.
Fair enough. Thank you. Then Ellis.
Basically echo those sentiments. I think it's an early development from what I can gather from the pitch, and I just think there's limited evidence for user adoption, attraction. Maybe just a little bit of feedback about the pitch, and maybe provide a little clarity for some like kind of what your revenue model would be in terms of like how you'll eventually make money with it.
Sounds good.
I'll be out for now.
Thanks, Dan.
And Chirag.
Yeah, Matthew, I thought it was an interesting pitch, and I've heard of a few companies that are trying to facilitate kind of that marketplace idea that you have between patients or participants for clinical trials as well as to those physicians. And I think it's such a great problem to solve because it's so widely prevalent, and I think you're actually working on something quite useful. However, since we invest exclusively in hard tech, we'd have to pass for now. However, it sounds like you have that med device background, and I encourage you to keep pushing on this. I think that it's a ripe space for disruption.
Yeah, I mean, hardware is hard, as I always say.
It is.
Thank you so much. We're moving on. Matthew, this is your feedback. Please share your GGW profile and please support others in the chat. Thank you for coming. And
thanks for the opportunity.
Thank you. The next one is Ibek. Ibek, you ready?
Hey, I'm always ready.
Okay, you got 2 minutes. Go for it.
Yeah. Hi, everyone. I'm Ibek. Previously founded a startup in college that has scaled to 100,000 users. My co-founder was a founding engineer at a dev tool startup Tenderly. They grew from 0 to 5 million in 1 year. Both of us, we initially started building a HR tech tool. Quickly figured out that front-end development was actually our biggest bottleneck. We spent more than half of our time writing front-end code. So we built a Figma to code tool, a tool that basically translates Figma designs to code that already matches your existing coding style and reuses your components. And then we quickly saw this was our internal tool. We saw how well it works for us. So we actually pivoted to build that. Since we launched in 7 months, we grew to more than 150K in ARR. We now signed our first enterprise deal. And that's going really well. at the same time, we spoke to over 200 companies, trying to understand problems between design and development space. And we actually see that a lot of the problems in that handoff process actually come from Figma. So now we're also building a whole Figma alternative. Basically, how you can think about it is it looks and feels like Figma, but it's a tool that can connect to your code base. So basically, designers can work with real code components, not fake components, not components that are disconnected from code, which allows designers to be able to work with real code. And when they're done, AI can basically generate pull requests on their behalf. So yeah, that's in short of what we're building. We have a LOI from Netflix to use us, and it's a super exciting space. I think now with Figma going to IPO, it's kind of a right time to get in and build a better tool.
Fantastic. Right on time. Thank you so much, dear Sharks investors. Let's get started. Who wants to go first?
So, Aybek, what's stopping Figma from including the feature you're describing?
Of course. Yeah. So Figma is built on their own proprietary vector format. So Figma is built on vectors. That's how their infrastructure is built. We are building a different type of infrastructure. We found a way to build a compiler that translates design to code, but also code to design. So basically, we're building a tool that feels like Figma, but under the hood, it's code. And Figma cannot change their infrastructure. They would need to change everything. And I think at their scale, they're never going to do that. So that's our technical moat at this time.
What languages and frameworks do you support?
We support all languages. We actually built that infrastructure previously with AI. So it's basically the main ones are React and Tailwind. That's the most common one, and that's what AI is best at today. But if your code base is in a different language, we can support it as well. So it's AI based.
You're using API calls on the back end to kind of transform those designs into code, basically.
Yeah, basically, if you can think about it like the layers are your code base, and then we have our own infrastructure layer, and then there's design. So that this is our compiler, and our compiler, it has its own schema. So AI translates your existing code to a schema that's basically that's our format, and then can translate that to design and back and forth. And this is done by AI. So we've already done this with our previous tool, Superflex. So we're able to generate code in any coding language or framework you're using, and we're using the same infrastructure right now. So with AI, we're able to support any framework.
Could you talk a little bit more about your current, I know you mentioned one enterprise contract already and how you're seeing your pipeline grow, and maybe a little bit about their go-to-market strategy?
Yeah, we mainly grew bottom up. Actually, we focus on building a community. We have over 13,000, actually 14,000 developers using us today, and that was able to get us a lot of bottom up growth. The one enterprise pilot we signed is Arista Networks. It's a company out of the Bay Area, publicly traded company. And that's so mainly our go-to-market is bottom-up, community-driven, community-led. And we're doing a lot of marketing, like content marketing on Reddit and Twitter.
Aybek, could you speak to, you mentioned you have a LOI with Netflix.
Yeah.
What is Netflix trying to do with your product?
Yeah, basically they were actually trying to do the same thing internally. It's an interesting trend, but some of the enterprises today, they're asking their designers to work with tools like Cursor, Lovable, Bolt. People are seeing the value and they understand that it's a natural progression. If AI can write code, it's just makes sense for designers to be able to control some of the end user experience. Netflix, we spoke to their design engineering department, and they've been testing that internally, like how far can a designer go to writing code? And when they saw us, they're like, this is awesome, because they basically cannot build this tool internally. They don't want to waste resources on that, but they are interested in using it.
Have you raised any capital or participated in any accelerators that took on some equity?
Yes. We went through Antler Accelerator, through their New York, actually, shout out to New York, their New York program. And yeah, we raised 800K to date. And we are looking to close our pre-seed round relatively soon. We're raising a 1.5 million pre-seed.
Hi, Beck. I wonder if you can comment. The design to code automation space is getting pretty crowded. You got like Anima, Locify, Builder.io. Like what's sort of different or differentiated about your product versus these competitors?
Great question. We actually did a comparison about these three tools. Those three are our main competitors. We're AI native, and we're in VS Code natively. So those tools you have to like Builder.io, all of those. Generally, why customers switch from those to us is because in Builder.io or Anima, Locify, they need to go to a web-based tool, basically from Figma to a web-based tool, then select the language that they want to use, then copy that, paste to their code base, and it doesn't match your code base. And then you have to go, like the flow is really tough. Versus like developers, they want to stay in the flow, they want to stay in their IDE, and that's what we support. That was differentiation with a Figma to code tool, but I would say it's getting less relevant with what we're building because now we want to own the platform, the design platform.
And with that said, if no more questions, let's ask investors who is interested to connect with IBEC, who is in, who is out. Chirag, you want to go first?
I'll unfortunately have to be out for this one, IBEC.
Yep.
All right, one shark is out. Well left. Then Ellis.
Yeah. I'll connect with you. I think I actually saw your pitch at SaaStock as well. Probably got a little buried during that one. And yeah, I would definitely like to dive in a little bit more. Although I would just say, like initially, if it's starting to feel like a crowded space, but I would definitely like to see how you're differentiated. So.
Thank you.
All right, one shark is in. Fantastic. Congrats. So let's ask the rest of the sharks. Akshata.
Yeah, thanks again for the pitch. Definitely, it seems like you're building again in a very competitive space, but seems to have already kind of gotten and built a community network aspect. So I'd love to dig in a little bit more, even though it's on the earlier side, and start the conversation. So for that, I'm in.
All right, fantastic. Two sharks are in. So two left. What about Pankaj?
Yeah, now what you're doing sounds very interesting. I'd love to learn more. So I'm in.
Fantastic. Two sharks are in. And Yegor?
I would love to learn more as well. And hopefully I can test out your product after this call and then, see how much I like it. Super cool idea.
Fantastic. Congrats, IBEC. Well done. Please share your GGW profile in the chat. We will connect you with a selected investor, with investor who selected you after the event today or tomorrow via email, and you'll have a proper conversation with them. So it's almost a jackpot. So congratulations. And we're moving on.
Thank you, everybody.
Thank you. And next up is Christy Wall. Christy, are you ready?
Hi.
Hi,
my name is Christy Vo. I am a physician psychiatrist. I am an advisor to chief medical officers such as the chief medical officer from HIMSS and Spring Health. I am pitching for Lucid Care. I'm actually an advisor for them, but I say what the hell. So Lucid Care is about unleashing data for precision psychiatry. So the problem to be solved is that when patient comes to the patient visit, they are often forgetful of what actually occurred in between visits. They usually just report the most severe panic attack, the most severe insomnia. And so there's not an accurate picture of how patients are doing in between visits. So by using wearable data as well as self-report data, we create a report to send to the psychiatrists so that they can use to empower their clinical decisions. With that, we hope that Lucid Care can really provide some transparency on how the patient is doing, as well as help the psychiatrists be better at accurately diagnosing and provide the right treatment. We currently had two small accelerator award, including an NIH National Institute of Mental Health Award and an award from APA. and we have about 100 users and about 10 clinician. We are very at the early stage, and that's all that I know, to be frank. all that I can share right now. But I would love to hear feedback, as well as if anyone is interested in this space to connect.
Thank you so much. Why the founders didn't come to pitch? We we appreciate that you're doing this, but why they didn't come?
She is at a female founder event.
Okay, all right. So, dear Sharks, dear investors, do you have any questions to Christian?
Yeah, can you highlight what I have a couple questions. One is related to the user experience. So you mentioned that there was about 100 users that are using this platform from the patient side, and then 10 clinicians. Can you describe what the user experience has been like for the patients? And then secondly, would love to hear what the revenue model for something like this would look like.
Yes. So in terms of the patient user experience, there has been no complaints. It's very easy to use. You can download right now. It's a functional app for both the patient and the provider. In terms of the target market, we are targeting the large market of private practice and group practices to start, with potential to grow to hospital systems, as well as insurers and payers.
Any more questions?
And the technology that power this would be transferable to primary care and other specialty, and not just psychiatry.
Okay. Any more questions?
Yeah, I know the founders aren't here currently, but I would love to see if you can provide an overview of their background potentially.
Yes, there are two co-founder. One is a Yale MBA and MD grad. The other one is serve as the role of CTO. He used to be at Flatiron Health, and then potentially me.
All right. Pankaj?
Super quick question.
Question.
Sorry. Go ahead,
Yeah.
Pankaj.
Yeah. Chrissy, am I understanding this right? Is this like a marketplace with patients and practitioners, and you're matching them? Is that how I should think about it?
No. So the problem we are trying to solve is that whenever you go to your doctor visit and they ask you how has your sleep been, you don't have an accurate picture, right? You just say, "Oh, I guess it's been okay," because you don't remember what happened 2 weeks ago. No one remembers how well they've been doing. So we're providing an accurate picture by using wearable data and producing clinical relevant report that is usable for clinician to actually use in their clinical decision. Actionable wearable data, because nowadays the wellness space has these data, and like they notify the user, but it's not very actionable.
All right.
Build on that real quick. What evidence do you have that supports this approach, or have you run some trials in the background? In what way is it improving patient outcomes?
Our co-founder did a survey of 1,000 patients with the Yale hospital system, and found that one of the major problem that patient and clinician report is miscommunication on how they're doing, even in the visit. Like they leave the visit not feeling heard, not feeling understood, not feeling that their clinician really understood what happened with in between visits. So we developed this to solve that problem.
Okay. But you haven't actually done anything with your approach to know that is solving or closing the gap on that problem as of this point?
Well, I have 15 years of clinical experience, and I have this problem for my own clinical care, and I consult to Spring Health, Luna Joy, many different companies that I know psychiatrists would agree this is a problem.
All right. We probably have time for one last question, if a quick one. Chirag, did you have one question?
I actually did, but she answered.
Sure.
It was really related to like kind of her experience as a clinician, and like would you be someone who would use this and
in or out?
I am a user. I mean,
and like, what can you describe like can you describe like what that, for your patients, like what is that, have they described, what have they described in terms of using this tool?
Well, let me ask you that question. When was the last time you went to see your primary care doctor and said that my average sleep is 6.5 hours in the last month? There has been a decrease in the last week because of increased stress in work, and my sleep score is XYZ, my activity level is XYZ. You don't, right? You don't go to your provider saying those things. And that's what we need to help us make those clinical decisions.
So arguably, I have on my wrist here this device called a Whoop. I'm sure maybe you've heard of it. It provides exactly that, maybe in a format that's less shareable or digestible by clinicians.
Yeah.
So
Yeah.
why couldn't Whoop just kind of spend a month building?
They are, because of regulatory issues, wellness space it's very hard for them to become a clinical space. So we are starting out as a clinical company.
But theoretically, they already have the device, they have the data, they have the reporting, so they could just kind of build a layer, pass the regulatory hurdles, and then just kind of.
Similarly to what
Right.
you guys know, sometimes people have their book of business, their business plan. They like to stick to it, show traction. They don't like to deviate from their own market.
So would you then be platform agnostic? Like, you could take data from Apple Watch.
We integrate with Apple Health, and which integrate with all the other.
Okay.
All right. So this is the time when we ask the question to investors. Are you in or out? So let's start from Yegor.
It's an interesting idea, and I think there's potential. However, as I said before, we don't do healthcare, so unfortunately, I'm going to have to pass.
All right. One shark is out, 4 left. What about Pankaj?
Yeah, this is interesting to me, Christy. Given my background in wearable and interest in healthcare and AI, I'd love to learn more.
Oh, great. Thank you.
One shark is in. Thank you. We will connect you. What about you guys, Akshata?
Yeah, thank you for kind of talking through with the work you've been doing in this space. I think right now we're kind of looking for a bit more evidence that the market is resonating with the product and kind of going into that process a little bit more. I think that your customer traction is a little bit early for us in that regard. So I'm going to pass on this one.
So thank you. 2 sharks are out, 1 in. Dan?
Yeah, just to echo those sentiments again, I think probably just a little bit early for us. We'd like to see some validation for the approach and that it is working. But the cause is fantastic, so I wish you all the best of luck.
Thank you. Appreciate that. And Chirag?
Yeah, I'm having a real tough time with this one because it's a really interesting space that you're in. But the hard tech component to it is the fact that you're using the wearable data, right, to integrate with the software technology that you're creating. I think I'd be interested to, just maybe 6 months down the line as there's more traction, I'd be open to hearing kind of what updates look like then. In the meantime, I think you have a really, really neat background in the companies that you've advised, and so would be happy to chat with you on that level.
Great. Yeah, I'm also happy to help your company, your portfolio company.
All right. That doesn't mean like you're in or out for this one.
We'll say I'm in.
Okay, so congrats. 2 sharks are in, 3 out. Congrats, Christy. Please share your GGW profile here in the chat. Support others, and we're moving on. Thank you. The next up is Christopher Smith from the Bay Area. Christopher, are you there? All right, you muted.
My bad. Here we go. Can you guys hear me okay?
Yeah, you got 2 minutes. Go for it.
Let's do it. I'm a unionized energy developer with $2 billion in infrastructure deployments and the founder of SunTrain. My company has solved the fundamental issue impeding the advancement and modernization of the U.S. electrical grid. SunTrain eliminates transmission line congestion and electricity bottlenecks by moving battery freight trains over the existing railroad network, just like the traditional coal trains of yesteryear. Contrary to popular belief, U.S. freight railroads are among the most efficient in the world, and even today, 40% of everything that moves over these railroads are energy products. This includes coal, natural gas, crude oil, biomass, ethanol, fossil fuel derivatives, and nuclear materials. By instead moving load-ready electricity, the railroads immediately become new transmission corridors moving utility-scale energy between substation nodes, independent power producers, existing generation facilities, and energy-intensive industries like ports, smelters, and manufacturing centers. We also have direct current configurations specifically designed to serve data centers and critical AI infrastructure. The U.S. presently needs 300,000 miles of new transmission lines to keep up with today's electrification demands. Since the year 2000, developers have averaged less than 1,000 miles of installed transmission lines per year. SunTrain bypasses these development bottlenecks while simultaneously deploying the energy systems that our grid so desperately needs. Since our formation in 2021 and various funding rounds, SunTrain has completed proof of concept testing by moving our prototype over 10,000 miles with Union Pacific. With our selected manufacturing partners, SunTrain could deliver 400 battery railcars annually. 400 railcars equates to 4 individual battery unit trains, each with nearly 2 gigawatt hours of storage capacity. Our trains are integrated with proprietary charging systems that allow our batteries to simultaneously discharge directly to the grid or behind the meter industrial loads without ever leaving the railcar. We're raising a $10 million Series A for a 40% stake to deliver our first of a kind, fully engineered, certified, and regulator approved 17.2 megawatt hour battery railcars so we can immediately begin developing our 24 gigawatt hour project pipeline and complete a pilot project with Xcel Energy in Colorado.
All right, thank you so much. Time is up, dear Sharks, dear investors. Any questions to Christopher? Who wants to start?
Maybe some feedback, Chris. The ability of a founder to sell what they're building and their vision and what they're part of is really important. And so I think you were reading out kind of your pitch there, and I would encourage you to, instead of reading, maybe jot down a few notes and just kind of like read off of the notes and then develop it with your own kind of language rather than just kind of like reading a wall of text. Because then what happens is that you just kind of lost me. Like I don't, it's not memorable. It's not conversational. It's not kind of, it has a different feel to it. And so, if I may put on my spectacle hat on, for that reason, I am out, even though it's preemptive, but that's kind of my feedback to you.
No worries. I understand. SunTrain's an extremely complex industry in a world that virtually no one understands. So I had a lot of time. I had a lot to get through in 2 minutes.
Yeah.
Also, then just make it simple, right? Like explain it to like an 80-year-old. Think of me as an 80-year-old that knows nothing about what you're doing, and kind of like, how can you really, really, really make it simple so that I can understand it? It pikes my interest, and then I'm like, well, wow, this sounds kind of cool, right? And so, yeah, I get that it's like a lot of info, but then like compressing more info in 2 minutes doesn't make me an 80-year-old to be able to digest it, right? I'm still going to be an 80-year-old. Compress, and if you compress more info, it's just not helping me understand what you're doing.
All right. Thank you.
Thanks for that feedback.
Anyone else would like to ask a question?
I think that's really good feedback. I just want to add to that because it can start to feel a bit robotic if you're just reading off it. I would literally just take a recording transcript once this gets posted to YouTube, stick that in ChatGPT, and say, explain this to me like a 6-year-old. And honestly, like the pitches like this, remember, it's not about like pushing the totality of information about your startup on it. It's just to be a teaser to go, hey, what if this was possible? Well, guess what? It is. And this is our approach. Maybe to kind of to ask a question about it, how are these batteries sort of charged at these renewable energy sites? And then I assume they're also discharged at like some predetermined consumption points. And like, is that process like automated, or does it require like some kind of manual intervention to make that happen?
It's entirely automated, and we developed those charging and discharging systems with Shabli as well as Waptec.
Okay. And does that require like infrastructure at these discharge points that is part and parcel to your startup, or can they be like independent third-party pre-existing infrastructure points?
We use existing railroad infrastructure, but we need to install minimal charging and discharging stations adjacent to the rail so that we can get the energy on and off the trains. But after that energy is discharged from the rail car, it's immediately ready to go onto the grid or to behind the meter industrial loads.
Okay.
So, Christopher, I'm super focused on AI and data centers and those kind of things. Lot of investment going in. and companies like Meta are getting into energy.
Yep.
So from that perspective, are you working with a data center deployment? Is that your target segment? How can what you're doing be useful as the data center build out happens?
Yeah, data centers are having a really difficult time finding energy surpluses because the grid's transmission system simply can't keep up with electrification demand. And since we have the ability to deliver 2 gigawatt hours on a literal daily basis, we can provide data center developers an alternative to locating around transmission line assets and instead locating around areas that have railroad capacity, which is virtually everywhere. There's 140,000 miles of railroad line, opens up an entirely new corridor and way of energy development. And it also allows the ability for renewable energy to be brought in, though I will say we are energy agnostic. So we can move any form of energy as long as it's electricity.
Yeah, my feedback would be, it seems like you are conquering world peace. I think if it were more focused around, here's where I see more energy demand. I'm using data center as an example. And here's the problem I'm solving. And here's how I can help. I think that might be more appealing. My recommendation is if you make your narrative more specific, it might resonate better. Of course, the risk is if people are not interested in the problem, specific problem, then they would not be interested, but at least you would isolate targeted investors who may want to pursue you. Just something to think about.
Thank you.
Thank you. And anyone else have any questions? All right. If no more questions, then I have a question to investors. Who is in, who is out? So Christopher is transferring power through roads. That's kind of exciting. So what do you guys, are you guys in or out? Chirag?
Yeah, Christopher, this is a really exciting space that's definitely up our alley. When you started the pitch, actually, it sounded so familiar that I looked up your company in my email inbox, and I actually remembered that one of your investors had forwarded me this opportunity. And so what I said to him at the time is that the company is too early simply because there's no revenue in the form of ARR. But once you guys hit that, at least $500,000, quarter to $500,000 inflection point, would be happy to have a chat. So for now, I'm out.
One shark is out.
Thank you.
Or left. Then Ellis.
Yeah, it's definitely like interesting and differentiated, and it seems very novel. But that said, ultimately it would be out of our wheelhouse. I just perceived that this was probably a very like capital intensive type venture play, and also probably just too early for our taste. So it's cool, but not for us. Good luck.
Thank you.
Akshata.
Yeah, thank you for sharing this. It's clearly an ambitious approach to the grid bottleneck. That said, it's kind of a bit outside of our current investing focus at this time, and given the ARR progress that you have or lack thereof for a Series A, I think it probably is not the right moment for us to join in. So I'm gonna pass on for now.
Thank you. 3 sharks are 2 left. Pankaj, what about you?
Yeah, Christopher, I'm out. I'm actually interested in the energy space, but I'm generally the first check pre-seed seed. So your Series A doesn't gel well with me. The other thing I would say is there are multiple ways to skin the cat, and it was not clear to me how your approach would be differentiated. but I'm out for this round.
All right, thank you. And we have one shark left, Yegor.
Yeah, so Chris, I think you're a bit too late stage for us, too capital intensive. And then also, as I mentioned earlier, ability of a founder to sell their vision and to kind of explain what they're spending most of their time on, right, in a concise way is really important. So for that reason, I'm out.
All right, thank you so
Thank you.
much. Chris, this is your feedback. Please share your GGW profile. Please connect with other founders, and we have more investors in the chat, and support others. We're grateful for your pitch here. So thank you.
Will do. Thank you.
We're moving on, and the next one is Kenneth Young from Globify. Kenneth, you ready?
Yes, I am.
You got 2 minutes. Go for it.
Thank you very much. My name is Kenneth Young. I'm been in my businesses in the education technology space. We are building a TikTok for language learning. My background, I've been in the education business for over 25 years, a profitable business there. And I know that the biggest pain point for language learning and language acquisition is vocabulary. And that's kind of the thing that people and all the companies out there do really terribly. If you look at Duolingo, you look at Quizlet, specifically their vocabulary acquisition is really boring. And so what we're doing is we've created a platform that's akin to Quizlet in terms of that we have the space repetition system and all that type of functionality. But the thing that we're doing differently is that we are using AI generated images and videos to allow people to learn in context. And in the way that the laws are working right now, if it's AI generated, we can be using AI generated images of K-pop stars, of Robert Downey Jr., of Will Smith, and we're doing that. And the technology of AI is making it so that these type of we're able to make it in video. I'd love to show it to you if I had. Obviously, this is a verbal only presentation, but if you saw what we were doing, you would like it, I think. And and so we're leveraging. We're the good thing about, even though the AI is making things so fun and entertaining, the way that people learn doesn't change. You need repetition, and you need to learn in context. And that's what we do in space. So that's kind of a quick summary of what I'm doing. I'm happy to answer any questions.
Thank you so much. Right on time, dear Sharks. Any questions to Kenneth?
Kenneth, can you?
I'll go first. Ken, you mentioned Duolingo, very successful. Not clear to me how you differentiate. Can you say it one more time?
Sure. So the way that I look at Duolingo is, and I'm a person that learned Japanese and Chinese. I'm a native English speaker. I think Duolingo is excellent at getting you from 0 to 1 or 0 to 1.5. It's not good at getting you to 2, 3, 4. It's not really good at getting you to 3 to 10 because it's just so limited. And then the one big thing it doesn't do is teach you a lot of vocabulary. And that's the area that we're focused on. And we're a B2B play. So we help teachers. We go with schools and we say, hey, the biggest pain point you have is vocabulary acquisition. We can take your students and teach them 3,000 vocabulary terms. But you still need teachers because they want to use those vocabulary. And so that's where we're focused on. We're a B2B, and the teachers bring all their students year after year.
Kenneth, this might sound entirely stupid, and please forgive me because this is not necessarily my space, but the thought that comes to my mind is that, okay, like if the argument is that Duolingo can get someone from 0 to 1 or 0 to 1.5, what if that's all that they need? What if that's all that they're training for? And so what I'm getting at there is that, is there true demand out there for people that are trying to get to that 0 to 2 level, or that 0 to 3 level that you're talking about? That if I'm, say, I'm Indian, and so I travel to India quite frequently, but I mean I know Hindi, but let's say I didn't know Hindi. If I was just trying to learn Hindi for the first time and use an app like Duolingo, it would do enough to get me by, which is what I need it for. But obviously it might not have the extensive capabilities that your technology might have. And so really the summary of the question is like, is there true demand for those group of people that are looking for that more advanced learning experience that eventually for a venture investor like is going to allow your company to be that billion-dollar plus type of exit that hopefully you IPO or you get acquired by one of these incumbents?
Great question. So I would answer, my education business is to help Japanese get the TOEFL score they need to get an education. And those TOEFL scores, and there's millions of people who take TOEFL scores every year, that need the TOEFL. At every level, you want to do any type of study in the States, you have to have a minimum TOEFL score. And that takes vocabulary. And that's the biggest thing that I've known in my own business is that you can take the smartest Japanese person, and the thing that really slows them down is that they don't have enough vocabulary. And the thing about vocabulary is you have this thing called what we call the curse of the plateau effect, which is you get just enough vocabulary to get by, but not good. And what we do is focus on helping you expand from a vocabulary that 700. I'm sorry, we get people from 700 to 1,000 to 3,000, and it can take people months. But I know the market's out there. It's in the numbers of people taking TOEFL and IELTS test.
It's a great response. I mean, I guess I did not think that expansively, but it's I see kind of where you're coming from there.
Thank you.
Is there a reason for why you're pursuing a kind of sales-led, well, not a sales-led growth strategy, I guess, but B2B rather than B2C? Like, do you kind of envision that it's easier to sell through these language schools and kind of educators rather than directly to the consumer?
Yeah, I think that the B2C is such an expensive market to go after, and I know I'm in the education space. We all we all have the same periodicals. We read the same magazines and online magazines and get the same things. It's not $30,000 marketing budget will get you everywhere in this place. There's nobody out doing much in there. So if you're doing, if you're trying to be Duolingo or Quizlet, where you're going after the B2C, you're talking about millions of dollars in advertising. And I think in this market, if I win the teachers, I win this market because the teachers bring the students.
So how does the revenue model look like then, more or less? Do you have anything both now and in the future, right? Like, because my first thought is that anything in the education space, you're working with a very constrained budget, right? And so then it's not like classical B2B where you're selling to a company and if like a $100 subscription is just not even a thought, right? For an educator, $100 is a lot of money, right?
Sure. So what I learned from is Quizlet. So Quizlet provided their flashcard system for free to teachers, and the teachers brought it. So Quizlet has about 50 million monthly average users right now, and they charge around $3 a month. So we're going to follow the same path as them, where teachers can bring in as many teachers who sign up to our platform, which is $3 a month, can send off all of the things to all of their students, and all of their students can study to their heart's content, and everyone gets one flashcard deck. But if you, like anybody, if you get something from a teacher, if you want to customize it for what you want to learn, right? You want to create your own deck and share it with other people. Well, then now you're veering from exactly what the teacher provided. You're now personalizing it, and that's where we charge. That's where you become a subscriber, and that's going to be $3 a month. And so we can use that. So what a teacher doesn't want is my students need to pay money to access this content. So we're gonna make sure that doesn't happen. But I want teachers to take, and then so imagine like an influencer, and it goes, oh, I can use video-based content to teach something to the people that are following me. Every follower, you don't want them to, obviously they have to be able to use it for free, but so that gets this massive exposure. But then our job is to then let them, some percentage of them, be able to to be able to personalize it and change and do something different for them. And our secret weapon is, I got 4 developers. I've already built the system. So if I look at the cost base of Duolingo and Quizlet, it's just insane. They're like hundreds of millions of dollars in cost, and I have, the product is shoddy in my mind. So we don't have a high cost base. We have massive opportunity.
Okay.
That's
All
it.
Sorry, real quick, just one more question. There's lots of language labs out there. Obviously, this is a very competitive space. Can you
Yes.
just talk about your traction really quickly? I always view proof of approaches in the pudding, so to speak.
Sure. So we're in a pre-seed environment. So we just built the service and they've launched it with my own company. So right now I'm going to be starting the cold outreach through cold emails, because that doesn't cost me much money. So I have about 10,000 users on our system because of my own company reach, but we're on this adventure, and I'm pre-seed. So I'm not sorry, pre-seed. I am pre-series A. I said I would categorize that. So we've built the platform, and now we want to start putting jet fuel in our system.
Okay. So you're pre-revenue?
We have about $10,000 in revenue.
But monthly or?
Unfortunately, I have purposely not really started the marketing right now. So we have a total of about $10,000 in revenue, and we started sales about 3 months ago. So it's very early days for us in revenue wise.
What you're doing is interesting. I'm having a tough time putting my arms around why this is venture scale. So, I'm looking for 100x return. Could you speak to Tamsam Som and why investing in you now would give me 100x return?
Well, if you look at the market cap of Duolingo, which has 50, they have about 70 million monthly average users right now. Their market cap is $24 billion. It's a big play, and the market for English language learning there are 2 billion people learning English language right now, but the solutions out there are just not very good. And so can we out of the 2 billion market, can we get 100 million? I think we can.
So you're trying to have it both ways, right? You're saying Duolingo is super successful, this much market cap, blah, blah. Yet they suck, so I'll do a better job. So,
well, no, but as I said,
cannot be both.
Well, Duolingo is the one that gets you to 0, 1. So if I wouldn't try to supplant Duolingo from the 0 to 1 side. That's not my focus. My focus is because Duolingo for schools, a teacher can't customize Duolingo to do what it wants to do, what the teachers want to do. Our system is all designed because it's vocabulary. Every teacher has their own vocabulary list. They don't. So we have a bunch of vocabularies, but we've made our system so that every teacher can customize it for their students for what they want to teach. Duolingo, you can't do that. And on Quizlet, there's just no context. There's no images. And so Quizlet is another example of a company. They have about 50 million monthly average users. And their market cap 4 years ago was $1 billion. They raised money at a $1 billion valuation. And 4 years ago, Duolingo was $7 billion. So, in a 4-year time period, Duolingo went from $7 billion to $24 billion. I'm not sure. We don't know because, it's a privately held, Quizlet's a privately held company. We can totally take Quizlet.
Okay. That's probably, this is when we ask investors to tell us who's in, who's out, and we will see who wants to connect with Ken. What about Pankaj? Are you in or out?
I'm going to pass. I don't understand the space, and I'm going to pass.
All right, thank you, Yegor.
I think I'm in. It's interesting. I would like to learn more.
All right, one shark is out, one shark is in. Congrats. So we have 3 left. Akshata.
Yeah, thanks for sharing. I think for me, I'm out. I don't really see the proprietary methodology around your content or your learning approach as much, and that's not as clear to me. So for that, I'm out.
Thank you. Dan?
Yeah, I'm not sure I totally get the differentiation, or it doesn't seem kind of remarkable in this age of, I don't know, I just, something isn't quite connecting with your pitch, and I think maybe your traction doesn't necessarily reflect that you're like onto something here. And with language learning apps, there's so many of them, so many different alternative approaches that, ultimately it's traction that I would look to understand whether or not the approach has validity. And I would kind of encourage you to design your pitch around that, to say, okay, we've had like 4 successive months of growth, so obviously we have something here. Barring that, like language learning it almost feels like this fungible commodity. So I think for those reasons, I would be out.
Right. Thank you. And Chirag?
Yeah, I would be out as well, just due to the fund's thesis. And I'll just quickly say, I mean, while you're entering in a pretty bloodbath type of market, it's a very red ocean environment that you're going after. I mean, even if you're saying like going after 100 million of a $2 billion market, I think those are some of the numbers that you said. I mean that's 5%, and I mean even getting 5% is so difficult. And I think there's a very famous quote from Mark Cuban, who's like, he does not like it when when founders say like, okay, market cap is X amount or market size is this amount, and I'm gonna get this sliver of it, because even getting that sliver of it is like so stinking difficult. And so I would just convey that as advice. Even though I'm out, I will DM you a venture fund that I think that you can take a look at, that invests exclusively in edtech, that I know of. And so yeah, you should see that in your Zoom DM.
Thank you. Thank you very much.
Yeah.
This is your feedback. Please share your GGW profile and we're moving on. Thank you, Ken.
Thank you.
Next up is Alexander Markin. Alexander, you ready? You muted. You got 2 minutes. Go for it.
Good afternoon. My name is Alexander. I'm CEO of Ado, and we are building a connectivity infrastructure where we connect third-party generic IoT devices, third-party generic sensors, and cameras. Secondly, we are building a data stream market, meaning that we let people who own those devices sell their data to data buyers. Talking about the market is huge. You all know AI is growing. People throw money into it. Guess what AI needs? AI needs data sets to get trained. And once it's trained, it needs data to interact with real world if it's an AI agent. We provide both. We know the prices. The price tag for data set starts around 200,000 and goes up depending on the quality and the size of the data set itself. AIs have scrapped all publicly available data. They are willing to pay for proprietary data sets. We started by getting the data buyers, bulk data buyers on board. We have 8 MOUs. We already did 3 integrations. We released our app. It's in a test net. You can connect Zigbee devices, meaning temperature, humidity, CO2 levels, UV lights, presence sensors. You can connect that and stream the data. You can connect IP cameras. IP cameras range from $80 to $120. We have a bulk data buyer who is paying $15 a month for a camera. We also onboard businesses and municipalities to sell the data. They already have all the infrastructure in place. They already service it. Now they can make some extra money on top of it. So basically, we go by demand. We don't store the data. So this way, we stay out of the legal hassle. We stream the data. If somebody needs a data set, we stream it to the database of the buyer. We have different types of buyers. We also work with VPN services, so the users can download the app, start, and basically expand the amount of devices they have. I think my time is up. I would be happy to answer your questions.
The investors, any questions to Alexander?
Yeah, Alexander, that's very interesting. I started the IoT business at Qualcomm, so I'm familiar with the space. Can you specifically describe who your customer is? What segment? Because IoT is like everything.
Yes, sure. So first, want to highlight we're not producing hardware. We connect existing hardware from third-party brands. Our customers' IoT data, that would be weather, temperature, humidity. That is kind of a long-term market. What we found, we've been operating for a year and a half. What we found, there is a huge demand for camera data, especially if they're in right locations, especially if they are concentrated. And we work directly with businesses who already have those cameras in concentrated locations, usually big cities, certain countries. So we onboard them. Our final data buyer is AI companies. Yeah, sure.
Yeah. Can you be specific on who your customer is, who your ICP is?
AI companies who needs data sets, AI companies who needs real data streams to interact with the world. We also work with municipalities and governments when they need the analytics. We don't provide analytics, but we provide connectivity and we bring our partners over for analytics.
Yeah, it's still kind of general, but anyway, Pankaj, I guess if you have more questions. Anyone else?
I just want to kind of jump in a little bit more and dig a little bit deeper on Pankaj's question is like, for how are you competing with companies who are doing similar things and providing these proprietary data sets, but using satellites and much more scalable ways to get that vision AI and those kind of data sets?
Sure, that's different types of data sets. So satellite would be, again, a photo from top. We basically talk about live video streams, a video stream of car traffic, a video stream of foot traffic. You can analyze, basically from a municipality perspective, you can analyze safety, you can analyze citizen behavior. From the corporation standpoint, you can analyze the buyer behavior, you can analyze how many cars on the street. There are many types of things you can do. We don't do analytics, we supply the data. Now, why we have a humongous advantage is because we don't deploy hardware, we don't service hardware. It's the either already existing networks of hardware or it's people who can get in and service the hardware. So what it allows us to do is basically we have zero cost for hardware deployment and zero cost for hardware maintenance. So yeah, very scalable, can do that worldwide. Again, doesn't matter US, Hong Kong, Singapore, wherever.
Let's see if we have more questions. Anyone else? Then
maybe just to kind of expand on Pankaj, because I think his question is critical here. Maybe coming at it from a different perspective, what is the goal of the buyer? Like when they're buying this data, what objective are they trying to fulfill by using that data?
They try to have any marginal increase on efficiency of their AI, whatever the AI is doing. It can be analytics. Most of the time it's analytics. In addition,
to bring it down to earth for us, can you actually take an example of a customer?
One of our partners is 375 AI. They analyze Amazon trucks on the road. They know, they can see how many of them are coming. They can compare it to previous periods, and they sell the analytics to hedge funds. This way, they're trying to predict sales. So that's one of the examples. I know they also work with municipalities and government.
Maybe we have time for one last question, if any. Okay.
I'll jump in. So please don't answer the question again because you haven't answered it. Google is an AI company. Silicon Valley has 20,000 AI companies. There are many municipalities. So when you say AI companies and municipalities, it's very difficult to go after everything, right? So I'm actually, let me finish. I'm actually interested in what you're doing, but only if you can describe who your ICP is. You mentioned you have 8 MOUs.
Yes.
I'd love to learn more. So take it as feedback, but Daniel, I'm in for that reason.
Sure. So regarding AI companies, the one that specifically work with camera data, because it's something we can provide efficiently and that's something we know there is demand for. We initially will target small startups, usually in incubators such as Plug and Play. We're going to also target UAE region and Singapore. Now, the idea there is try to hook them on our data. So once one of them will succeed, the ideally will use that forward. But even if not, that will bring us a business case and we can go and try to target medium-sized AI companies. Again, when it comes to analytics, when you train an AI, any data can be relevant if it's the right type. You don't like when the AI does analytics. A lot of times, the developers themselves don't know what again matters here in this analytics. So
Yeah,
they
we got
can
a
bring
minute.
any additional
Thank you, Alexander.
data.
Yeah, so appreciate that. This is the time when I ask the question to investors. Who's in, who's out? And what about Yegor? Are you in, out?
Yeah, I think supplying AI companies with data is interesting. However, this doesn't feel tangible, concrete enough to me. I think checking out your website, there's some mention around Web3, and it just feels like a bit of a hodgepodge of just kind of, jumping on the AI bandwagon, even though it just doesn't feel like you have a clear executable roadmap that, is going to gain you that traction. So for that reason, I'm out.
Thank you. One shark is out. What about Pankaj?
Yeah, like I said, I'd love to see your pitch deck and better understand what you're doing.
Okay, so one shark is in. Congrats. Akshata?
For me, I appreciate the mission. I've looked at a few other teams working in this area, particularly more on the defense side and kind of supplying that information. At this point, I'm not kind of seeing the clear wedge or advantage that would make this particularly stand out. So I'm a pass for now.
Thank you. Two sharks out. Dan?
I think that success at a startup really requires like a laser focus. And so just in my opinion and like feedback is that IDO feels like just kind of hammer looking for a nail. It just feels a little too generalized to be effectively targeted to an initial niche, which I personally think is like critical in the early days of a startup. So I'd encourage you to kind of think of the specific ICP use case that is going to get you the traction necessary to grow and get to the next stage. I think for the interim, I would be out for that reason.
Do you mind if I'll answer that one? Our niche.
You will answer later.
Oh, sure.
Yeah, we have to give word to other people. Chirag, please close.
Yeah, I'm out for this one.
All right, Alexander, thank you so much. Please
Thank you.
share your feedback or like answer in the chat and your GGW profile, and we gotta move on. We'll connect you with Pankaj afterwards.
Thank you.
Thank you so much. And next up is Emma Briggs. Emma, are you there?
Yeah, I'm here.
Okay. Yeah, I can hear you. Just let me find you. Okay, I see. Okay, you got 2 minutes. You may start now.
Okay, so hello, my name is Emma and I'm CPO of Breaks. And most in-store screens across like retail, F&B, hospitals or airports are still just dumb displays, right? Like AI is moving really fast in the cloud, but brands like headquarters still can't execute strategies or promotions fast enough at the edge. And we fix that. Breaks turns every screen into an AI-powered frontline operators. It thinks, talks, and acts in real time. For example, like Subway is using us, the sandwich Subway, and we help them to boost store profit by 20%. It's how we do that. The headquarters, they just need to write the prompt, and every screen will just like start thinking and reacting. Like for example, it will say, "Oh, I want to promote this combo," and then every screen will just thinking, and including the kiosk will just like generate automatically generate the interface. Yeah. And the most important part is the customer, when they entering the store, they just need to talk to the screen, say, "Hey, I'm a vegetarian. Can you like recommend me some combo?" And the kiosk will just like show up. And yeah, so we are backed by 500 global, and now we are raising like 2 million to scale. And we are not just building the software, we are a core contributor to llama.cpp. So we are building the last mile infrastructure for AI on every screen in every industry. Yeah, thank you.
Thank you. Dear Sharks, any questions to Emma?
Emma,
Yeah.
how do you report that you bump a Subway store profit by 20%?
Yes.
Explain how that works exactly. Like, doesn't a person coming into a Subway already have a purchase intent? Like, are you selling like additional things, drinks, chips, add-ons to the sub? Like, how does that work exactly?
So because Subway is like a global market, so the headquarters they always have a lot of promotions, but it's really hard for them to scale to the local screens. So we help them to just like write the prompt, and then it will just like deploy all the strategies and screens. The strategies and promotions to the screen. And for example, like they want to boost, they want to sell this combo, and then the screen will just like sell for them. And also like if something sold out, like an item sold out, and it will just like add an sold out tag on the screen, and then it will like promote the second best on the screen, and then the customer will just like order the high margin items that headquarters wants customer to order.
Isn't the point of a promotion to bring a customer into the store? If you're already remarketing to me or marketing to me when I'm in the store, what effect does that have other than to potentially lower profits because now you're showing like some deal that I didn't even know previously existed? Like I'm not like connecting everything up in my brain here.
Yeah, actually we can let the store manager, like they also can write a prompt also. Yeah, they can like define the screens like you are a marketer, or you are an operator, you are like a ordering assistant. So like when the store manager they depends on what they want for the store, and then the screen will just like follow the prompts they want. Yes.
Okay. Emma, the use case makes a lot of sense. What is your product? Are you supplying the full system, or are you a service with the software? What's your product and who's your customer?
Okay, so currently we are a software, but currently our ICP is like a food F&B headquarter. But like maybe in this year or next 2 years, we try to explore the same systems to another strategy, to another industries, like a bank, airport, because there are a lot of screens like everywhere. Yeah, so like, and they also always have like a headquarter, and it's like really hard for them to deploy all the strategies to the screens. Yeah.
So this is existing screens. You're not asking them.
But we are a software, so if they have screen, they can just install our system, or they can go buy an Apple TV. Yeah. So
we have time probably for one last quick question, if any. All right. So the question to the Sharks: who is in, who is out? Let's start from Chirag. In, out?
Yep, I'm out for this one. I'm pretty confused with what the technology is, and I think I got a little bit even more confused after the questions were asked.
Thank you.
Okay, so
Emma, you don't need to respond. It's just the final feedback. You can then respond in the chat.
Yeah, I think I have this feeling your feedback is going to be similar from all of us, and that it's just simply not clear. I'm not sure I get it. Like from what you described, it sounds like something that's already been there that I've seen 1,000 times. It sounds like a solved problem to me, where you're just like putting promotions on a screen in the store. And like if there's more to it, which I'm sure there is, it just simply hasn't come across in your pitch. So that would be my feedback, and I'll be out for that reason.
Two Sharks are out. Akshata?
Yeah, I think very similar feedback to Dan Chirag. I think it's very hard to kind of see the additional value add. It kind of seems like it's on a point of sale system that you're adding another layer on top of that in some capacity for those promotions, which it's hard to see that conversion to cost savings or or increase sales, as you kind of mentioned earlier. So for that, I'm out. Okay.
Thank you. 3 sharks are out. Pankaj.
Yeah, Emma, I have to be out as well. I think your use case is actually interesting. I think the challenge is it's a very complex value chain in retail or what have you, in hospitals or in doctor offices, etc. And it's very difficult to dislodge the existing players. So I'm out for this one.
Thank you, Pankaj. Yegor?
I'm out as well. I think it's both. I'm still not crystal clear on how you're different to a lot of the other attempts at solving this problem in this space. And then also I feel like the sales motion is going to be like too sales heavy, too many moving parts with not a clear enough value proposition around how, like, what is this giving me? Like, what ROI would a potential customer get from this? So for that reason, I'm out.
Thank you. Emma, thank you so much. Just share your GGW profile in your feedback as well and support others. Appreciate your pitch. Next up is Alexei Cardo. Alexei, you ready? Okay, unmute yourself. You
Hi.
got 2 minutes. You may start now.
Hi, I'm Alex, and we help any business to launch custom mobile apps for their clients, employees, managers in one system in 1 to 3 weeks, sometimes even in minutes. Obviously, it saves huge amount of money on development. It can connect whole business in a more efficient network. It allows businesses to create their own app under their own brand, which improves loyalty and provides advantage. It's linked with multiple AI agents to improve efficiency with support, scheduling, and so on. So companies start saving on expenses from day one. It can be used for many businesses, probably. Our current clients are a network of daycare centers and a home community management company. For daycare centers, we have launched a manager's app in just 3 weeks. Now it's used at 100 locations. Managers launched it literally 10 times a day, 20,000 times a month. They have paid so far $15,000 and expanding it to a contract worth 100,000. And we have received a number of expressed interests from companies from different areas, including even a major car maker. So it looks like it has potential. So far, we have developed it. We have 5 senior developers working with projects with Toyota, Danone, and so on. But all but one work only part-time. We only have 1 full-time developer and 4 part-time developers. And we are looking.
Alexei, you pass time. Please say your final statement. So
we're looking forward to raise $250,000 to start switching developers to full-time and hopefully reach 50,000 MRR in 9 to 15 months and break even by that time.
Okay, dear Sharks, any questions to Alexei?
Alexei, what problem are you solving?
Multiple. For a franchise network, custom development of mobile apps for clients, for their franchisees, takes months and dozens, actually usually hundreds of thousands of dollars. They can have it with us for, say, $3,000 and from first month. It also makes transition to using AI agents way easier for companies. Moreover, I think no software allows to create apps for client, employee, and manager at the same time. This way, with algorithms and AI agents, it can basically run a whole company for you. And you can have it in 1 month. sometimes in a week.
All right. Thank you. Any more questions from the Sharks? All right. Who's in, who's out? Who's interested to connect with Alex? Or maybe quick feedback since we're approaching the end of the session. Maybe Chirag, not your field, I guess.
Yeah. I actually did have a quick question if you guys don't mind.
Yep.
That I just thought of with daycares being kind of like one of your ICPs. Can you describe like how that would all work out within the context of your technology, Alexei?
How it works?
Well, you're talking about how some of your ICPs are daycares, right? Or like involves people, parents who are sending their kids to daycares, or other the kids that are attending daycares themselves.
We have a network with 100 daycare centers. All of them bought their franchise for a certain amount of money and run them. The network provides them with our software managers application to run all the leads, schedules of employees, finances, and so on. I also have tutors app. They run logbooks, they have instructions, checklists, and so on. They have a client app who communicates with the daycare center and receives recommendations and so on. It's just basic tools for the business, but surprisingly, almost none of major US franchise networks of daycare centers have any apps. If you have mediocre old apps,
okay,
surprisingly, majors don't have it.
Okay, thank you.
Yeah,
And now, let's ask investors who is it, who is out. Chirag, are you in or out?
I'll have to be out, but it's an interesting technology. Just would be curious, if this is truly venture backable, given the scale.
Okay, thank you. One Shark is out. Dan?
I'm going to be out, and it just has a feel more of being a custom app development shop and a services play for whatever reason to me. It just doesn't sound venture scale, and just not an area we'd invest in. Thanks.
Great. Thank you. Two Sharks are out. Akshata?
Yeah, for me, I think that core functionality feels somewhat replicable using other no-code tools and platforms. So for that reason, I'm out.
Thank you. Pankaj?
Yes, same reasons. Not scalable enough and not disruptive enough. So I'm out.
Thank you. And Yegor, closing?
Yeah, I echo the other Sharks. I'm out.
Thank you. Alexei, this is your feedback. Appreciate that. Please share your information in the chat, support others, and share your GGW profile. And we'll be moving on.
Thank you.
Thank you. Next up is Alex from IP Note. Alex, you ready?
Yeah, I'm here.
All right, you got 2 minutes. Go for it.
Hello, I'm Alex, founder of IPNote, and I'm a former patent attorney. And previously, I managed more than 10 years my own IP law firm and did a lot of manual work hiring IP law firms around the world and manage them through email for my customers. And in 2022, I created a platform that allows customers to manage and hire IP law firms from any country in the world and work with them through one window and one standard process. And currently on this platform, users from more than 100 countries are working and generating around $1 million gross revenue annually. And then I implemented AI in this platform and improved a lot of processes. And now launched the first version of our fully autonomous AI that can allow customer just drop a message in their preferred messenger. For example, I want to register a trademark in 10 countries, and then AI will create tasks on the platform, find the best attorneys, negotiate prices, talk with them, answer questions, control the process. Full process will be completed using AI or by AI. And we are going to implement this AI agent as into current infrastructures of global IP law firms and enterprises to proceed a lot of processes of international filings and become one of the largest IP filing backend hub for the whole world. And currently we are raising $2 million to scale this platform from $1 million up to $20 million in gross sales in 2 years. And we have a commitment for $500,000 from our potential lead. That's it. That's all I want to say. Thank you.
Thank you. Right in time. So 1 million in gross sales. What do you guys would say? Who wants to start first?
So Alex, is this 1 million, is this the value of the contract signed on your platform, or is this your cut of the revenue?
Yeah, this is the value of the contract, and all money went through our platform, and we take around 30% of the deal in total.
Okay. Any more questions?
Alex, there are many players in this space. Can you speak to how you differentiate? And I'm an early investor in Harvey. If you're familiar with them, how do you differentiate versus the other guys?
The main differentiation for that currently we created a platform that allows small companies to manage their IP law firms using UI interface. But currently we are scaling our AI agent that do not need any UI interface. So there are a lot of players on the market who has AI interface, for example, where you can select that you want to register trademark in several countries or patents in several countries. And then you need to work with local IP law firms through email as well as before. But we changing another side. We are changing backend. So any IP law firm, any company can integrate our backend into their current infrastructure and optimize the process of collaboration with these local IP law firms. So we do not want to compete with all these companies who are attracting customers. We just integrate our solution into their current flow and optimize their processes, and became the backend core for these companies. So, for example, IP law firm has internal IP software, IP management software, has a lead of database of customers, and these customers want to protect IP in different countries.
Right.
So IP law firms now can do that just with one maybe person, and they can proceed thousands of cases per year.
Okay.
So this is our strategy.
All right. Please be concise with your answers. We have more investors potentially.
Yes,
Questions. Any more questions from the investors?
Yeah, just to clarify, you are selling to law firms, correct? So you're kind of supporting that process for law firms, or are you going like direct to companies that are needing to defend their patents and trademarks?
We have three main segments: small businesses, law firms, and enterprises. And for all of them, we are using one backend core AI agent, but just integration process is different. So
and to expand on that, what is your revenue model? With respect to law firms, is it on a case by case basis which you get paid, or do you have a sort of permanent monthly recurring type contract with them that permits a certain amount of usage? Or
yeah, we have small subscriptions and transaction revenue. So transaction take rate from each transaction.
What's the composition right now, versus take rate versus
for now 50-50. Our net revenue is split in 50-50. 50% is recurring and 50% just transaction.
How's your growth? How long has it taken you to get to this?
Without investments, we grew 30% per quarter in average.
Okay.
We probably have time for one more question, if any. All right, then I have a question to the Sharks. Who is in, who's out? Then are you in or out?
Let's be in.
Let's be in.
I'd like to see a deck at the very least. I don't know if this is exactly an area that we would invest in, But yeah, I'll definitely like have a conversation for sure.
Okay, congrats. One shark is in.
Take care.
Gosh, what about you?
I'm going to pass. I have other investments and I didn't see the differentiation.
Thank you. And Akshata?
Actually, I think I'll be in it. I'm curious to kind of learn a little bit more about how you're developing some differentiation in this space. It's an interesting area that we've looked at before, so would love to learn a little bit more.
Fantastic. Two sharks are in. Yegor?
I'm out. I feel like this is not our expertise. We wouldn't be able to be super helpful as investors.
I see. Thank you. And what about Chirag?
Yeah, I'll be out. Same reason as Yegor.
Thank you. Alex, this is your feedback. Please share your GGW profile here in the chat, support others, and thank you for coming. Next up is Jolly Nanda. Jolly, you there?
Yes, I am. Thank you.
All right. You got 2 minutes. Let's do it.
Great. Okay. So every day in healthcare, there's a crisis happening somewhere. You don't see it in the news, but it affects all of us. Our health stories are scattered all over, across hospitals, clinics, in our heads. They're locked in silos and they don't talk to each other. And this fragmentation holds vital information, which gets lost, and it leads to misdiagnosis, unnecessary testing, higher cost, and sometimes it costs you a life. I'm Jolly Nanda, and I'm the co-founder and CEO of Althea, and I know this problem firsthand after being misdiagnosed for decades. I had to piece together my own story and finally get the right care that I deserved. At Althea, we believe that the patient, the consumer, should use their power to own their own health story. Our platform allows you to do that. It aggregates all of your clinical data, allows you to augment it with your personal preferences, your lifestyle, and context to make the data meaningful. With that, we wrap it with our chronic disease management risk profiles that we have built for 5 models, and allow the patient, because it is their data, to share it with whomever they choose to either get better care, to be able to monetize on it, and be able to be rewarded for sharing their information. We're a co-founding team with about 8 decades of healthcare experience, both in payer and provider and data and analytics. Our first pre-seed round, and we've been self-funded until now.
Thank you. All right. Yeah, your sharks, any questions? We're approaching the end of the session.
Jolly, yeah, I'll jump in. It's the right problem to focus on. I see function health. I see superpower. Maybe there are other players. So how do you compare yourself? How do you compare Adea to these guys? And what's different? What's your unique differentiation?
So we have a B2B to C offering, as well as a C2B offering. What we are doing is connecting the ecosystem to be able to share the data. So first of all, our method addresses the data use right issues. And when you look at Function Health, what they do is it's subscription-based, and it allows you to, get testing done. But you only, like as an individual, then you basically have testing data from Function Health through their portal. And then you have your other medical tests from your, primary care, your specialty within, the rest of the clinic. Different clinics. Again, it just adds to the fragmentation. The direct-to-consumer products today do not allow for aggregation holistically across all stakeholders.
All right, thank you. Maybe we have time for 1 or 2 quick questions. This is the end of the session, just to make sure that we are on time. Any more questions?
can you just give us an example of somebody or a use case from your platform, how they used it and achieved success or a different health outcome?
Yeah, and I'll talk about myself because then I'm not violating any.
Well, it's okay to talk about somebody who's used your platform, and I mean, we don't have to, we don't need to know their name or anything, right? So you could just like obfuscate any details and just
absolutely. So one of the patients that we had essentially had thyroid cancer, but was misdiagnosed because the information that was needed really, because they were basically using retail care and telehealth again. So when the physician sees you in those type of settings, they don't really know everything about you. And so when they're trying to diagnose you, they're diagnosing the symptom that you're coming in with and that you're talking about. Similar to what—
Wait, this person got a thyroid cancer diagnosis through telehealth?
No, it was that because the symptoms presented itself, right, in ways that they thought it was the patient thought it was the flu, and went first for telehealth, then went to primary care. Both cases, were just basically being treated for the flu versus really digging deeper and looking at, why there were lymph nodes that were swollen, right? And by the time she got care, she had a pretty extensive thyroid cancer and had to go through, basically the full treatment and surgery. And that's why someone, would use it, is because we aggregate all of those pieces and create the appropriate story with the analytics so that when you go to your provider or share this data for either second opinions or even primary care or specialty care, they're treating all of you.
Thank you. We are closing the session, and the final questions I have to the Sharks: who is in, who is out, who is interested to connect with Jolly. Maybe very quick feedback for a few seconds. Chirag.
I'll have to be out for this one. I think it's too early of a company for us at this point in time. The problem point, I mean, it's incredibly admirable, pain point to solve, especially because it's hugely relevant. So, best of luck as you continue through this.
Thank you. Dan?
I mean, I get what you're doing on a fundamental level, but the delivery of it is just not clear to me, like how it's actually implemented. And I think the example you provided was just a little weak. I would maybe give some thought in your pitch about how you can convey that like more sharply and accurately. Yeah, but I'll be out for now. It's just early.
Thank you, Akshata.
I think likewise for me, I do think it's a bit early on that on your end. I think it'd just be easier to kind of better if you could better explain eventually the overall mechanism of how that shareability is more proprietary or unique and giving that particular edge, because I'm not quite seeing it currently.
Thank you.
Okay.
Pankaj?
Yeah, Jolly, I'm out. I'm invested in a couple similar companies. I think your differentiation around the differences in business model, they are not defensible enough. Any one of these companies can change their business model. So if it were disruptive, that would be different. So I'm out.
Thank you. And Yegor?
Yeah, it's an interesting problem space. It sounds like implementation and HIPAA nightmare because you have all these sources of data. You got to integrate all of that. Really hard to execute. Taking a look at the team, I'm not sure I see someone who would be the person kind of spearheading all the coding and all the technical work. I think you do have a CISO, but my understanding is that he's more like an advisor. So I think you probably need like a much. It's a big task to tackle, and with the current team, I find it a bit ambitious unless you can bolster that up a bit. So for that reason, I'm out.
Thank you so much, Jolly. This is your feedback. Please share your information here in the chat. And we are closing the session. Thank you. and looking forward to see you on our future events. So final things, if you allow, dear investors, to close with you to get your feedback. And before we do this, we have a group photo as we traditionally do. So please smile. I'll take this picture and we'll post this on social media. 3, 2, 1, smile. And one is waving. All right, so we have 2 nice pictures. Dear Sharks, dear startups, that was fantastic. It was 55th GGW Sharks and it was New York Tech Week. We definitely nailed it. We had 10 projects pitched today and we've got 10 matches with investors. We'll definitely connect you all after the event in the coming days. And with all these learnings we have some feedback from the investors. So please share your feedback as investors to startups, what you heard, how they can improve, what was good, what's bad. So, and then we will close the session. Who wants to start? Probably, let's start with Dan Ellis.
Oh, sure. Yeah, well, great. Thanks, Danil, once again, for coming back for another session. Always a pleasure. And thank you, entrepreneurs. Really appreciate hearing your pitches. Best of luck. I think, kind of some pitching feedback is what I would provide. I just encourage people to think that, this is a quick pitch format. So often the best way to convey an idea is with an example. So when you describe the problem, try to weave in a for example statement and maybe briefly walk us through with clarity what your solution is and how it would work in practice. You have just a very brief amount of time to differentiate yourself, and also I would say the briefest answers to questions that are possible. And so to practice this, game it out with your co-founders or your friends in terms of your pitch. And also this is a place for venture scale businesses. So that means that it's got to be clearly having some kind of hyper growth potential. So, make sure that your startup can fit that model if you're pitching here.
Thank you so much. Always great to have you. Thank you for these words. Pankaj, would you like to go next?
Yeah, because the time is short, keep it short, especially the answers. A, B, please answer the question. You guys, some of you told long stories but didn't answer the question. Last comment, Daniel, this was very interesting. First time for me. The variety of startups was very interesting. So thanks for having me.
Thank you for coming. I appreciate you managed to find time for us to participate. Really appreciate it and hope to see you in the future ones. So please stay till the end if you can. Akshata, would you like to go next?
Yeah, thank you, Daniel, again for having me on. I think it's great to kind of see the variety of startups that are here, and it takes a lot of courage to come and pitch on this. So kudos to you all to step up to the plate and put yourself out there in the first place. I think in terms of feedback, I'd echo that definitely, streamlining the pitch and to make sure that you have 2 minutes to really sell your story. Put in the traction, the metrics that you can to at least get people asking the right questions. I think that for us to engage more with what you're saying, it's easier when we have a couple things to go off of. And when you have only 2 minutes to kind of sell your main key points, that's really helpful for us to be able to try to dig into maybe one of those a little bit more, and you kind of get the opportunity to expand a bit more on where you're actually going with your startup. So that's definitely, I think, a piece of advice that would be helpful for folks pitching on here, especially given the short amount of time that you have.
Fantastic. Thank you for coming. Really appreciate it and looking forward to see you in the future ones. Yegor, let's go next.
Yeah, thanks so much for having me. Enjoyed hearing all the startups pitch. My piece of feedback would be that it's important that at this stage you convey why you are the right team for this job, right? And for this mission. Because your traction may not be there quite yet, your product vision may not be quite there yet, but if you are a strong team and you've been in this space before and you work well together and there's someone who complements you as a founder or co-founder, right? That's super important. The challenge is doing that in probably 20 seconds at most. And so I would have liked to see some more of, hey, like what does the team look like, and why are we the right people to tackle this challenge, right? We're talking about really early stage companies. Pivots are normal, probably expected. So yeah, that's something that I would encourage people to take into account.
Thank you, Yegor. Appreciate it, and look forward to see you again. And Chirag, you're closing our global session. No pressure. Was any whatever you have on your heart and mind.
Yeah, definitely no pressure here. I think honestly, Yegor, you stole my thunder just slightly, but I think one of the things that I've been coached a lot on, even with my own startup, especially when you're giving a 30-second, 60-second elevator pitch. I think honestly, if I'm to look at this objectively, 2 minutes is a long time for an elevator pitch, and so it's a great opportunity to have, right, to be able to share as much as you can. But the reality is you're probably going to have a way shorter amount of time, because I'm looking out the window here and I see the Empire State Building. I think they have technology now where elevators can go down pretty quickly, and so imagine if you're actually on an elevator with an investor, you're probably going to really not have 2 minutes even to talk with them. And so really what you can convey in this short amount of time, I think really comes down to three things. And Yegor definitely talked about team. I think that's the first priority, talking about who's actually building this technology. The second being that you actually are creating a solution to a problem that exists. Is the solution that you're creating something that might be something that's personal but not really venture scalable, or is it something that you have found people that would genuinely put money down in order to purchase that product? And I think the third thing would be market, and really related to that venture scalable idea of a business, is that for a venture fund, they're really looking at a $1 billion exits, right? That's basically the magic number. They're looking for $1 billion markets, and they're looking for $1 billion+ exits. And the thing is that even if you're creating a business that might not be venture backable and you exit for say $10 million or whatever, $10 million is an insane amount of money, and it's life-changing. It's genuinely life-changing. But for a venture fund, it is not life-changing. And so I think understanding the difference between what is venture scalable and what isn't, and if it isn't venture scalable, bootstrap your way, get that $10 million, whatever, and live on a beach or something. But I think that's the last thing that I would end it on. And as always, it's been a pleasure being on this panel. And thanks again, Daniel, for inviting me to join this.
Thank you. I'm always glad to have you and appreciate that you came this time. So this is how we nailed GGW Sharks 55th at New York. This is our digital New York office. You can see the New York from our window, digital New York space. So anyone who made it to the session, thank you so much. We're so grateful. Finish your New York Tech Week and the rest of the events with the most value for yourself. We're so grateful to you investors, to you founders for being together with us. The next event will be in San Francisco in person on April 27th. So please make sure to RSVP. We're gonna rock and roll in here. It's gonna be a lot of fantastic investors and startups, and we're looking forward to see you all. And on Digital Ones, we do it every month, and we'll see you soon. So thank you. Have a great rest of the day, and take care of yourself.